Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we are talking about new comments from Ford CEO Jim Farley on why Tesla has such a big lead, particularly in software. We've also got some new comments from GM, updates on Tesla in China, FSD, and more. Alright, looking at the stock, the run kind of continues here. Tesla up another 3.1% to close at $220.52, while the Nasdaq was down 0.1% on the day today. Citi did increase their price target from $175 previously, now to $215 per share. If only they had done that before the stock did the exact same thing, maybe it would have been of some value, but anyway, they have kept their neutral rating on Tesla. Alex Potter of Piper Sandler was out with a new note today as well. He has kept his $280 price target and overweight rating on the stock. Alright, moving on from the stock, we'll start off with a couple of updates out of China. First is the wholesale sales figure for May, reported by the CPCA, or China Passenger Car Association. Remember, wholesale sales is a combination of domestic sales in China and export sales originating from Giga Shanghai production. So that number for May was 77,695 vehicles. So only up about 2% month over month when there is an extra day, which adds 3% to the day count, so pretty similar on a daily average to April's wholesale sales figure. Year over year, it is a significant increase, I think 142%, but that's definitely a cherry-picked figure because there was significant downtime in April and May last year. Now, obviously, we'll see what this means in terms of a retail versus export split. I expect retail to be somewhere around 44,000, give or take a few thousand, based off of the insured vehicle data that we've been getting each week. So the split should be pretty similar to what we saw in April. And then of course the big question would be production. Tesla did build inventory significantly, so produced more vehicles than were reported as wholesale sales in April. We might see that again this month, but remember there was some holiday production downtime in the beginning of May. It's possible that we're heading into some more production downtime here, as rumors have been swirling about Project Highland at Giga Shanghai. We got a report over the weekend from Wuwa, who does drone flyovers at Giga Shanghai, that production was shut down on Sunday, and that Tesla has installed some GPS jamming devices which interfere with GPS communications for drones. So for whatever reason, they seem to be increasing security right now at Giga Shanghai, trying to keep any information from getting out. Alright, next up, let's move into the comments from Ford CEO Jim Farley. He appeared in about a 45-minute interview on the Fully Charged podcast. Definitely an interesting interview. Farley clearly taking cues from Elon in terms of his social media presence, so I'll put a link to the interview down in the description, but I want to focus on one particular comment that Farley made, which was an explanation for why legacy automakers are just so far behind Tesla in terms of software vehicle integration. As these competitive advantages for Tesla often do, it comes back to vertical integration. Farley explained that in the old way of doing things, they would basically bid out different components of the vehicle to different suppliers and get them to compete against each other so that Ford could get the best prices on those individual components. Farley estimated that that saved them about $500 per vehicle from bringing those prices down. So if you're not going to do it yourself, okay, that kind of makes sense, but the problem that has arisen over time as more and more software has been added to vehicles is that now maybe you've got, as Farley used as an example, 150 different components that all have completely different software modules, completely different programming languages, completely different intellectual property, where even if you're able to understand and possibly integrate some of those things, you might run into IP barriers. So a complete mess to try to get all of these components to work together, let alone have them all be able to be updated over the air or something like that. So, alright, the answer then seems to be to bring these components all under one roof, put them all on the same software architecture so that they can talk and work well with each other. And that's the direction that Ford is trying to head, but Farley, very candid as he has tended to be, said that they've never done any of that before, so that's an extremely challenging problem for legacy automakers to just start doing all of a sudden, let alone integrating it to their processes throughout the organizational culture. This is what Tesla tried to reiterate again and again and again at Investor Day, and it seemed to fall on deaf ears. All of this integration between the different teams from the very, very beginning stages of design all the way to servicing the vehicle, all of these teams are working together from the very beginning. Farley's example here is an excellent contrast to that way of thinking. So it's refreshing to see Farley continue to be so honest, continue to give Tesla the credit that is due. It's very similar to what we saw from former VW CEO Herbert Diess. Hopefully things will be a little bit different for Farley, but we see Volkswagen struggle with this too with their efforts in software with Cariad or Cariad, I can't remember how to say it, but it's clearly been an effort that has caused tremendous stress on Volkswagen. Alright, moving on from Farley's comments, we've got some new comments from GM CEO Mary Barra as well. at a business conference on Friday. She talked about electric vehicles, autonomous vehicles, and while she did acknowledge that Tesla is the leader in technology, profitability, and scale for EVs, she said that that lead is not permanent. I think GM, as we've talked about before, is still somehow clinging to some hope that they can be the leader here. But as each day has gone by the last couple of years, that has continued to look more and more outlandish. Barra also said that battery costs are still too high to build profitable mass market EVs that sell for $30,000 to $40,000. Model 3 starts at $40,240, so just above that. But we do also have to remember that even if you exclude the federal EV tax credit, which you should for a comment like this, there is still battery production credit, which will add to Tesla's margin. There's still regulatory credit sales that'll also add to Tesla's margin. So not impossible, but even with those things and the scale that Tesla is at, it's still a little bit tough. And Tesla's margin's probably a little bit lower on those opening price point vehicles. Obviously, Tesla's still laser focused on continuing to bring those costs down. Finally, Barra talked about EVs in China. She said that GM has moved too slowly to launch EVs in China, but that Chevy and Cadillac will be launching EVs in China over the next 18 months, which will be critical to rebuilding market share. She said the China EV market is due for some quote-unquote sorting, which I'm not sure exactly what that means, but probably implies that GM will somehow climb those market share ranks once they introduce these vehicles. But this is a pretty competitive market already, so I'm not sure that GM's prospects there probably match what Barra is implying here, which would pretty much be par for the course. Anyway, Elon replied to a tweet about this article, said that Tesla aspires to be as helpful as possible to other car companies, talked about making patents open, making the supercharger network open, and said, quote, also happy to license Autopilot/FSD or other Tesla technology, end quote. Elon has mentioned this before, so nothing new in terms of that possibility. Obviously, it was brought up a little bit on the Twitter Spaces with Ford, which I think would be much more likely to pursue something like that with Tesla than a company like GM. Moving on, we've got another update on FSD. This is coming from TeslaScope on Twitter. They followed up on a report that they had last year about some FSD testing more broadly throughout the world. They say that in addition to the UK, Tesla is hired and is actively testing FSD in Norway, Germany, Australia, New Zealand, China, and more markets. They said that's not a complete list, just the countries that they've been able to determine so far. They say that from their conversations, the overall employee opinion has been generally positive, and when presented with the open-ended question of do you believe FSD has seen improvement since your employment, a majority said yes. One employee did note that there would likely be specific use cases that would take much longer, particularly pertaining to local street signs, unique speed limits, things like that. Finally, TeslaScope saying something that relatively obvious, but still interesting nonetheless. They say that there are some upcoming changes that haven't made their way into customer-facing versions of FSD yet, but have been underway for testing for several months now. I would assume that things like Actually Smart Summon would be one of those types of features. So fun to see a teaser like that, but again, just keep those expectations a little bit in check. Next, we've got some updates on Tesla's referral program. As we've talked about, Tesla's been exploring different levers that they can pull for demand generation. Right now, they're testing something new with their referral program. For June 2nd through June 30th, on the Model S and X, people placing orders will receive $1,000 off their purchase and 3 months of free full self-driving. For the person making the referral, they'll earn 20,000 referral credits. That's up from 2,000 for the Model 3 and Model Y. But importantly, the referrer credit, that only applies if the existing owner does not actually have a Tesla vehicle already. Those existing owners, they can use referral codes. It just doesn't generate the referrer rewards then. The buy-side rewards are still intact. So this comes on top of the 3 years of free supercharging for the S and the X. So a nice little suite of incentives that Tesla is using there, and obviously correlating them with a deadline, creating some urgency to purchase. The 3 months of FSD capability is also very interesting. This has of course been talked about a lot, doing some sort of a free trial to increase the take rate. So Tesla now showing some confidence to be able to employ things like that. Oh, and by the way, those 20,000 referral points for the referrer, that could earn 8,000 supercharging miles. Those are bought in up to 2,000 mile increments, and they're good for 6 months. So could be up to 2 years of free supercharging for one referral here. Alternatively, it'd be enough points for 13 pairs of Tesla short shorts. Next, we've got a report from Nikkei Asia that Panasonic is planning to expand a little bit at Giga Nevada, increasing to a 15th production line at the factory. They say annual production is expected to increase about 10% from the current 38 gigawatt hours to 39 gigawatt hours. I assume they're giving that as a range because that's only about a 2% increase. So it sounds like they're saying that the new line should add 3 to 4 gigawatt hours of capacity for 2170s there at Giga Nevada. The other interesting part of this report, which maybe I just missed this previously, but apparently Panasonic is revising their strategy a little bit with their new factory that they're working on building in Kansas. According to the report, they were originally intending to produce 4680 cells at the new factory, but they're now going to do 2170s because of the urgency in battery production that's been created by the Inflation Reduction Act. So it sounds like because of that, Tesla and Panasonic prioritizing the speed that 2170s would offer at that new factory, at least for some initial period of time. So a couple of interesting updates there. Obviously, that doesn't paint the best picture for 4680 progress, but Panasonic would be even a little bit further behind where Tesla is at on 4680s, so even if things were progressing really well, 2170 is probably a much safer option to get to volume production more quickly. Alright, coming back to the big news from Friday, which was Tesla now showing all Model 3s being eligible for the full $7,500 US EV tax credit. We talked on Friday about a number of signs that pointed to this not actually being any change to the battery itself, but rather an interpretation or clarification on eligibility from Tesla. And per some digging that's been done on Reddit, that seems even more likely to be the case now. So as we know, to be eligible for the full credit, there are certain percentage thresholds that need to be met for both battery minerals and battery components. So looking at a lithium iron phosphate pack from China, for example, is obviously not going to be eligible for the full credit on its own, but part of the language here reads that, quote, alternatively, for purposes of calculating the qualifying critical mineral content for batteries in a group of vehicles, a qualified manufacturer could average the qualifying critical mineral content calculation over a limited period of time, for example, a year, quarter, or month, with respect to vehicles from the same model line, plant, class, or some combination of thereof, end quote. The same language then also exists for battery components. So interesting here, it looks like Tesla is able to average across the model lineup for a given period, which kind of makes sense because then you can transition your sourcing year by year alongside those percentage breakdowns with a little bit more flexibility. Essentially, you're getting additional credit for those vehicles that are, let's say, 100% US sourced rather than something that is just 40% US sourced. Those 100% vehicles can then allow other vehicles to earn the full credit. So that seems to be what's happening here with the Model 3 and all trims now being eligible for that full credit. All right, last few things here. Tesla over the weekend tweeted a little bit more about Tesla with the track package, the Model S, setting a new record at the Nürburgring for a production electric vehicle with a lap time of 7 minutes and 25 seconds. So we know Tesla's been kind of testing this out for the last couple of years, going back and forth a little bit with Porsche. So Tesla now snagging this record back, which is awesome to see. However, it looks like it may be for a short period of time. Hard to know the exact credibility of this, but there are some rumors on Instagram that apparently this might be dethroned within a week from another manufacturer, likely Porsche or Rimac. So we'll keep an eye out on that. And then Elon did host his Twitter space today with Robert Kennedy Jr. I didn't catch all of it because Apple was doing their big Vision Pro announcement today, which, we should probably talk about that at some point too, but I did happen to catch Elon mentioning that during his trip to China, he did talk with Chinese government officials about regulating AI and felt like they were receptive to it. How well that translates, I think, remains to be seen, but thought it was worth sharing. And then also, apparently today is the first day for Linda Yaccarino to start her CEO position at Twitter. Lastly then, just a quick look ahead at the calendar. This week should be pretty quiet from an economic reporting standpoint, but next week is going to be pretty crazy. We've got the CPI, PPI, and the June FOMC meeting all next week. So buckle up for that. But that'll wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. Also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Tuesday, June 6th episode of Tesla Daily. Thank you.